Hello, and welcome to the channel. If you're new here, thanks for joining us, and if you've been here before, thanks for coming back. In this video, you will follow along as we walk through a process that you can emulate to begin creating a breakout trading system.
We can see that we are here inside of our Bollinger Band Breakout Foundation. We can see our foundation here. And again, if you're new to the channel, a foundation in short is a pre-engineered system. So it allows you to test your ideas in a no-code environment, being backed by professionally engineered systems. So we can see we have our foundation loaded here. We see that we have our machine learning models, our volatility, and our liquidity models. And we can see once we actually begin the back test and start reading in some market data, these values will update for our machine learning models. We see we have our Bollinger Bands. So let's get started. What we're going to do, we're going to reconfigure our settings for our Bollinger Bands, and also go through the settings for our foundation, run a back test, and let's see what type of results we get. And we'll just choose some random values just to show the simplicity and how the system actually works. So I'm going to right click and go to studies. Inside of our studies control panel, we can see that we have our Bollinger Bands, we have our volatility and liquidity machine learning models, we have our foundation, which is our pre-configured or pre-engineered system. Let's start by configuring our Bollinger Band. So we just click settings, and then we can see, so we're currently looking at the high-low close average. Let's change that to the most recent price. So we're computing a simple moving average on the most recent price instead of the high-low close moving average. And looking at our current Bollinger Bands, we can see given the 10 periods, it's capturing a lot of the most recent variation. Let's play around with this. Again, we're just going to choose some random values. Let's make this a little larger, and meaning we're going to smooth it out a little more, and let's go with 1 standard deviation. Now we're ready to actually go into our foundation. This is where we can configure all of our trade management, our risk management. So this is a breakout system. So instead of entering and getting confirmation at the close of the bar, let's enter as soon as we get a breakout. And then we want to keep using our dynamic risk management system. Dynamic risk management is the risk management system that we've developed to dynamically select position sizes based on our machine learning models. So based upon the range that you have in position size terms, here we have a range anywhere from 1 to 20 lots. Is going to select the appropriate amount of exposure or the appropriate amount of risk in terms of position size, given what's happening in the market. And naturally, the machine learning models are going to be reading market generated information in real time and updating accordingly. So we're going to definitely leave this on. The institutional flow, instead of using institutional flow, which is another machine learning system that we've developed, we're gonna not use institutional flow this time. But what we are going to use is our volatility filtering. We're trading a breakout, and it would be great if we could use our machine learning system to really filter out the most volatile events. So we're going to turn on volatility filtering. And the sensitivity, let's go with a medium sensitivity, and when there are increases, not decreases in volatility. And then we do want to take, this is fine, we'll take have an exposure of 500 USD per trade. So we're risking $500 per trade, and minimum position size is 1, and our max is 20. Daily drawdown, let's bring this down to maybe a 1,000. And our max give back trigger, this is just once we're in the green by 1,000 USD, if we give back 500, then we stop trading. That's fine. We do want to use a trail. 20 tick stop is is okay. Target multiple. So target multiple here, this is a multiple of our exposure. So our exposure is $500. So our target would be placed at 15 times that. I think that's a little high for a breakout system. Let's bring that down to maybe something like 8. I think this looks good. So we can apply this, and we can close this out. Apply. Okay. So we have our settings. So to start our back test, what we're going to do is just bring over our control panel here. And to get to this, you would just click chart and scroll down to replay chart to pull this up. And then we do want to leave this at single chart because we're only testing a single chart, and we do want to use the accurate trading system back test. So we're going to just click play here. We do want to clear all trade data for symbol and account and click OK. So that's going to allow us to reload our data. We want to disconnect from the data feed. And then let's pull up our trade activity log. So this is our trade activity log. And what we're waiting for this QC, which stands for query counter. It just represents the number of background processing being done. And then once this is at a value of 0, we can start our back test. So it should be updating any moment now. And then we would just simply, start our back test. And after which we can review our results. Okay, now the counter just dropped to 0. So I'll move this out of the way. And we just click play. And we can see we're immediately into a trade, okay? We're running a trade. We're trailing our stop. We can see that our machine learning models are updating. So we're making forecasts for volatility and liquidity, which is informing our trading system. So then that was a really nice trade. So I'm going to allow this to complete. And once the back test finishes, we'll come back and discuss the results. Okay, so our back test just completed. Let's bring over our trade activity log and see how we did. Okay, let's make this a little bit larger. Okay. Wow, this looks, at first glance, this looks pretty good. Okay, what do we see? We see that we have a profit factor of 1.9, equity peak roughly of 12,000, a drawdown of 5, had a run up of roughly 8,400, equity valley of about 7,000. So this system was never underwater. So this, again, is a pretty short back test, but the length isn't long enough to determine whether or not we could actually trade this live. However, given the activity, given the frequency in which we traded, so we took 38 trades. This is over about a 30-day period, 38 trades. So it's long enough to start determining, what type of things we would like to optimize. Because what we would like to do in a situation like this is, these results at first glance look pretty good, but it doesn't mean that we have a working system. So we want to analyze our results, and you want to really understand what your system is attempting to do. Are we actually achieving the goal that we set out to achieve when developing the system? Are you comfortable with the drawdown? So you have a $5,000 drawdown. Again, you were never offside. Profit factor still is roughly 2, which is really good. Win percentage is 34. So we could be taking some trades where the core thing that we're looking to exploit isn't always there or isn't always likely. So that's something that we could look at. So our average profit factor is almost 4. So that is a sign. So the fact that our average profit factor is almost 4 and our profit factors are about 2 means that we could be getting into some trades that we may want to avoid. So we could just calibrate our risk and trade management system to maybe filter some of that noise out. And what we would do in this situation, we would just, do a longer back test. So we would use our in-sample period to, optimize our parameters. And then we would test over a significantly longer period that we would not alter the settings of our parameters, because we don't want to curve fit. We don't want to try and have the system fit to any specific period of time. We want our system to be able to generalize to some degree. So our average time in trades, longest held winning trades, so a couple hours on the average time in winning trades. Losing trades, this looks good. So in winning trades, that we're in a winning trade on average for a couple hours. Losing trades, we cut pretty quickly. So that's good. We traded 2 lots. So out of the range of position sizes, our system said that 2 lots consistently, that 2 lots were the best way to balance the volatility, the risk that we were taking, or the risk in the market, with how much exposure we had selected. So it's literally this simple. You would just load the foundation, change the settings like we did, and just start a back test. You would then review the results, and this allows you to wrap your ideas, your strategy ideas, within a professional risk and trade management system, already engineered. Doesn't require you to have to code anything, doesn't require you to have to understand mathematical modeling or machine learning, and yet you're able to leverage the mathematical models and machine learning systems that we've already developed.
To access the exact systems and mathematical models shown in this video, be sure to visit our website to learn more. And if you would like to learn more about the professional process we use to design systems, and to do so in a no-code environment, click the link in the description to enroll in our free course, Automated Trading Foundations. Be sure to follow us here and on our other social channels to receive additional insights to fast-track your automated system development.